Hello, here we are today with John and Aaron with Martell Technologies. Martello Technologies Group is a technology company that provides clarity and control of complex IT infrastructures. The company develops products and solutions that monitor, manage, and optimize the performance of real-time applications on networks while giving IT teams and service providers control and visibility of their entire IT infrastructure. And I will hand it over to John. Thanks.
Thank you very much. Appreciate that. And thank you all for attending the presentation. I will go through the slides in 10 minutes, and then will be some time for questions. First slide is the forward-looking ubiquitous legal statement, confidentiality, and then I'll talk about what we do. So if you look at that top line, ensuring exceptional productive digital experiences, that is so important, particularly right now, as we see more and more IT teams dispersed. We see workers working from home, working from the office, or anywhere. And if you think about that from a few years ago, a couple of years ago, we would go to a client and there'd be 5,000 employees working in 3 different business locations. Now that's 5,000 employees potentially working in 15,000 locations. So it really becomes important to really understand that digital experience. How well is the systems that you have bought delivering the business productivity that you expect as an IT team? And how do you measure that? And that comes down to that user experience. And you want to keep that employee productive, right? It's no good, as you all know, I'm pretty sure hundreds of, or whoever, how many of you on the call, but all the people we speak to say, sometimes Teams doesn't work. Sometimes the video is pixely. Sometimes you can't understand each other. And that isn't productive. And that's exactly what we measure. But the point is we do it proactively. We can tell in advance if you are going to have a bad Teams call. Think about the value of that from an IT team. Think about how an IT team would position that to be able to say, this is what I need to be able to understand, and I can tell people in advance they need certain things to fix. And particularly within that home environment where the CIO and the IT team have no control over what is happening in that user's endpoint, how many people are on Netflix, how many people are gaming, how many people are also doing video conferences from that same location, all means they need actual insights to practically manage this digital experience and tell if people are going to have any issue with their Office 365 experience in this case. And I will go a little bit more into that ecosystem in a couple of minutes. So from a total addressable market perspective, at the moment, and we've announced this, we have just over 2 million users, but we're adding quite a lot. I'll show you some of those timelines in a moment, which gives us 1% market share. But the important thing here is digital experience monitoring isn't mainstream yet. Gartner, and it's always good to have third-party validation, Gartner have said at least 4 years before digital experience monitoring is considered a mainstream application within the IT ecosystem. So that gives Martello an awful lot of time to start growing. But when I look at our predicted 12% market share, I'm fairly confident that's somewhat conservative. But that's heading towards 40 million users, right, from my 2 million at the moment. So that conservative 12% market share gives me a significant growth opportunity. At the same time, Martello has been demonstrating it has an M&A capability. We've done roughly 1 acquisition a year since we went public in 2018. And our focus now is, do we go deeper into this Microsoft 365 environment, or do we go broader into other applications that require digital experience monitoring, such as SAP, SharePoint, other Salesforce, and other technologies that businesses rely on to ensure that user experience is delivering that productivity. If I look at our performance, as I said, we went public in 2018. At that stage, we were doing 5.1 million a year. And already FY21, which is where we're now, we're looking at heading towards pro forma 17.6 million recurring. And that's important. Our recurring revenue, 96% of our revenues are recurring. Our MRR is 1.42. Our positive adjusted EBITDA are 0.3. These are solid figures. And when I add in the gross margins, and I've mentioned here, we focus initially on that Office 365 revenue stream. We have other streams. We are the only analytics tool that Mitel uses for all of Mitel systems. And Mitel is still a $1.3 billion unified communications system or ecosystem that people are relying on. We look at roughly around 7.6 million annual recurring revenue with that partner alone, and that's very high margin, over 95%, and 98% recurring revenue on that revenue stream. So that revenue stream alone gives us a degree of solidity that certainly has allowed us to be stable during these economic uncertainties and gives me a solid platform to grow from. An important topic here is is customers. Very, very diverse customer base. And again, that's really important. If I look at our channels, I've mentioned Mitel. We, in the last couple of quarters, have engaged with a company called Paisler, who have a product called PRTG, and then Microsoft. We see Microsoft more and more pulling us into opportunities and deals, bringing us in where companies have installed Office 365, and there's a huge push on that at the moment to get Office 365 using cloud environments. And certainly we are very focused on being a very reliable Microsoft partner and partner of choice. And when customers have problems with their Office 365 installations, or particularly in Teams, Mitel is reaching out to us saying, can we use your technology to understand their environment to allow them to troubleshoot why they're having issues with Teams, SharePoint, or that in other Office 365 environment. And as I mentioned before, our user growth. In June 2020, we were at 1.55 million. October 2020, we're 2 million already. And you see a short 29% increase over that short time. But the other thing is why the industry chooses Martello. And this is significant. The change we're all seeing in the IT ecosystem is around the CIO and the IT teams. 2 or 3 years ago, a CIO and IT team delivered. They had their own data center, they had their own applications running on their servers in that data center. That is no longer true anymore. They now procure. We all hear about software as a service or anything as a service. That means they're renting. They're not buying, they're renting. Even a unified communication system, they're renting Zoom, they're renting Teams, they're renting a Mitel phone system. And when you do that, you become more of a procurer, but then an assurer. You need to be assured that the systems that you've procured that you do not control anymore, somebody else controls that. You are demanding a level of insurance that's delivering a business productivity. And that's important because you need to be able to measure that. You need to be able to measure that what you have procured from Microsoft, from any of your managed service providers, from a systems integrator is delivering the business productivity, because that's how you answer the questions from the executive business leadership to the IT teams of, does what we have bought deliver what we need? And I do see, and Gartner has mentioned this only a couple of recent last few months, we're going to transition from service level agreements, which just measures that the server is on or off, into experience level agreements. So SLAs into XLAs. And when you hit experience level agreements, you're truly talking about this business productivity. Does what we have bought achieve the business productivity that we are paying for? Because unless you're measuring that user experience, you can't answer that question. And that's where I see our growth point. As you see that tipping point, as we move into a much more mature ecosystem where CIOs and IT teams are being much more specific about the experience they want their users to have, and they can truly measure it and hold as service partners, all this SaaS software will be held accountable to that experience. That's where I think we will see our significant growth. So why invest in Martello? Well, I've mentioned the high quality SaaS revenue, 96% recurring, 1.4 million MRR base, and significantly solid gross margins. And those are based on our Q2. You can look up what I've talked about today. You can look at that up with Gartner, Statista, or even Microsoft 365. And the other thing is capacity to execute. Strong leadership, big global team. We just closed a nice large bank in the Far East. We've got a track record of solid CAGR. And as I mentioned, an active M&A program. And we proved we can integrate. We acquired this Office 365 capability, and the integration is just about wrapping up. We acquired that during COVID. We acquired and we've integrated during a time of economic uncertainty and during a pandemic, and we managed to get it done. The other thing that's significant, and I'm going to leave you with this thought and we'll transition to questions, is tech comparables. If I look at where we sit at the moment, mainly because we're relatively unknown and we're still a microcap, is our comparables, our tech comparable valuations, we're sitting around at 2.8 times total revenue. If you look at our comparables, they're much higher. And again, we're just starting to push through that now. We see that as something significant in the next few months / quarters for us. So now is that an opportunity for people to invest in Martello and then help us grow and grow with us. So at that point, I will pause and I will open up for the questions.
Great. We have about 9 minutes for questions.
Thank you, John. My name's Kevin Deedy, H.C. Wainwright. Appreciate the insightful presentation. You showed on your customer screen both the U.S. Post Office and Major League Baseball. I was hoping that maybe you could add a little context on for exactly what kind of work you're doing for each. And then apologies for cutting you off, but could you also speak to that 1.5 to 2.0 million user figure? Are those individual enterprises or user seats, and how do you define that?
Yeah, I'll start with the first one. If you look at Major League Baseball, every time you focus on the dugout and you see them pick up their phone from the dugout, it's our analytics making sure those work. That's a Mitel phone system, but our analytics sitting underneath. And it's the same with a number of hospitals who are on the front line of what's going on. They're still using their black phones, right? There's still black phone systems running through that. And if that's a Mitel phone system, we're the analytics tool making sure it actually works. So that's how we fit in that ecosystem. US Postal Service is the Office 365 environment, more of an analytics piece there in terms of how that's working. So again, mixed bag in terms of whether it's our unified communications analytics or it's our Office 365 analytics there. But again, similar examples in that respect. And in terms of seats, yes, that's exactly what we're seeing. Those are specific seats. So range of different clients, diversified customer base, but all adds up into we can see it. But the interesting there, Kevin, is that means we have the data as well, right? We can see where the anomalies are in the Office 365 data. What's interesting is just over a month ago, there was a fairly large North American Office 365 outage. Our clients knew 20 minutes before Microsoft did, announced it, sorry. We were ahead of that one. And the point where that's interesting is because we've got all these sensors spread out, and it's not that they're inside the Microsoft environment, they're looking at the Microsoft ecosystem. We're slightly more sensitive than some of their own outage sensors in that respect. So we knew in advance, and the difference that makes is troubleshooting calls. Somebody could actually tell, rather than wait for all these people to phone the help desk and say, Office 365 is out, you can send alert saying, we know Office 365 is out. Please don't tell, we're dealing with it. Please don't send us a note. So it stops IT desks getting overwhelmed and actually saves them quite a lot of money.
Thanks for the color, John.
Thanks.
John, hey, it's Ben over at Kingswood Capital Markets. Just in terms of, you talked about M&A being a key part of the growth strategy. How do you folks really think about kind of the make versus buy decision and having an internal team that can come up with new parts of the platform versus going out and buying them? And to the extent that the market really isn't giving you kind of that big premium, sales multiple on the equity, how much more difficult does that make it for you to be acquisitive relative to to other folks that have big double-digit price to sales multiples out there?
Yeah, Ben, great question. If I look at absolutely that, the build and buy strategy, I look it up, when you look at any M&A target, we've got a very solid product roadmap. And I want to see what fits into that roadmap. Is it going to accelerate us because somebody's already done it? Or does it give us another effectively string to our bow, more depth? So if you think about Office 365 space, if it's something in privacy, is it something about billing? Is it something about procuring? Where does that fit in that depth? But then, like I said, there's other products, like we've already got Mitel for the unified communication space. Is there more we could do there? that unified communications as a service space. But then do we push even further? We look into other applications that are considered business critical and expect user experience, levels that guarantee productivity. So that's kind of where we fit. And when I look at that M&A map, if it doesn't fit somewhere onto that, we probably shouldn't be talking to them. There's no point. But yes, your point about share price does make it a difference. But these are the levers we pulled, and Erin, our CFO, is on the call as well. When we did our recent acquisition of GSX, which was only May this year, same thing. How do we move the share price levers with the cash price, with the equity, all those sort of things. So it becomes a conversation between us, the board, our bankers, and the targets. And we do have a third-party banker involved in M&A. We're still small. We don't have a dedicated M&A team. It's mostly myself and Erin and the product team, and then we involve our third-party to help us have those discussions.
Got it. Thank you.
John, Jim McElry from Bradley Woods. It seems to me that the next step that you might take is to move from the diagnostics to the repair or mitigation of whatever issues are taking place.
Yep.
Just wondering, it's kind of a follow-on to Ben's question. I mean, how do you, well, one, do you want to take that step? And then two, if you did, how do you accomplish that given the multiple that the stock is trading at right now?
Yeah, Jim, it's a great question. I mentioned the data, and this is where, if we look at any form of advanced machine learning, and I'm hesitating AI because a lot of people throw AI around like it's a magic term. It's not. That's significantly difficult. But even with levels of advanced machine learning head into artificial intelligence, we can become more proactive. So it becomes that sort of, as you transition to that fixed environment, to us, it's more about the usage of the data to be able to identify what needs to be fixed. And that comes down to, as I said, with the CIO, now looking at an environment where he doesn't control anything. He doesn't control the data center. He doesn't control the server, the application, and with people working from home, not even the network. But can he send an advance and say, hey, you are one of our Office 365 users. I can already see you've got problems with SharePoint. I can see you're going to have problems with Teams today. To solve that in your home environment, you need to do the following. So they are proactively reaching out to say, please solve this prior to telling us a problem. So and a good example, we have one large multi-billion-dollar Canadian insurance company that's bought our product. We've reduced their Office 365 tickets, their troubleshooting calls, by 40%. That's an ROI that I can present right out to any client right now, because the insurance company gave us that information themselves. So when I look at that and say, okay, you've got a help desk of 5 people, for Office 365, I've reduced your tickets by 40%. So 2 of them can be repurposed and given something else to do. Let's say their salary is around 75K each, that's 150K. Well, it costs you 100K to buy us. So we've just buying us at 100K a year saves you 50K a year. That's a fairly solid ROI right there. And as I said, moving into that fixed position, I think that's when we start to see the data usage becoming much more useful.
1 minute.
What's your footprint? Are you a piece of code sitting on everybody's laptop at home? Are you in a server? Do you have are you in a box that's sitting in a closet at headquarters?
A bit of both, right? So we're certainly what we call the probes sitting out on the endpoint and then back in the data center. So we're cloud-based. So if I look at something like Martello, we're in the cloud, but then our probes sit out on the endpoint and gather that information. So we can give, for instance, in the network operations center of a big enterprise, there's our screen showing all of their Office 365 users, highlighting who has problems.
Great. I think that's our stopping point. Thank you so much, John and Erin, and I wish you a great rest of your day.
Thanks, John.
Thank you.
Guys.
Thanks, guys.